Welcome to the Life Mastery Podcast. You know where you can find those tips for health, wealth, and wisdom. And today we're doing something a little different, something you specifically asked for. We're going to take a deep dive into bookkeeping. In fact, we've got two great sources lined up. One's an article called 13 Bookkeeping Hacks to Save Time in 2022. The other is a shorter piece called Save Time and Money with These Bookkeeping Hacks. Our mission: to make bookkeeping less intimidating, more efficient. Whether you're a business owner or just someone who wants to master their finances.
It's fantastic you're tackling this. You know, so many people think of bookkeeping as this chore, but it really is the foundation for success. Financial success for both businesses and individuals.
That's what I keep hearing. So our shorter source here, it mentions these 3 golden rules of accounting. Can you break that down for us?
Yeah, those rules are really all about double entry bookkeeping. You know, it's a system that's been around for centuries, developed by Luca Pacioli. And it's still really the gold standard today. Essentially, every transaction is recorded twice, once as a debit, once as a credit. This makes sure your financial records are always balanced and accurate.
So no more stuffing receipts in a shoebox, I guess.
Definitely not. Not if you want a clear picture of your finances. And speaking of key principles, this snippet mentions 5 fundamental accounting principles that every business owner or aspiring accountant should know.
5. All right, lay them on me.
Okay, so the first one is the revenue recognition principle. This tells you when to record income. Then there's the cost principle, which says to record assets at their original purchase price. The matching principle ensures you're linking expenses to the revenues they help generate. And of course, there's the full disclosure principle, emphasizing transparency in financial reporting. Lastly, there's the objectivity principle, which emphasizes using verifiable evidence like, receipts and invoices.
It does seem like a lot to keep track of. But I can see how these principles bring clarity to the financial world. So both of our sources here, they really emphasize the importance of accounting software. But why is it so vital, even for someone just starting out,
Think of it as your financial command center. Even basic software organizes your data, far better than any spreadsheet ever could. Plus, it can generate those key reports. That would take you hours to create manually.
Okay, and what about the more advanced options? What do those offer?
Those can be real game changers. They can link to your bank accounts, digitize receipts, even categorize transactions for you.
Wow, so you're saying I could potentially ditch the shoebox full of receipts?
Absolutely. Digital records are much more secure, easier to search, and they just make tax time so much smoother. Plus, automating these tasks really frees up your time and mental energy. For that more strategic financial thinking.
That sounds like a huge win for anyone, really, not just business owners. Speaking of resources, I want to take a quick moment to highlight a fantastic organization that offers a wealth of support and guidance on various aspects of life, including financial well-being. It's called Wings of Love, Inc. And their website, wingsofloveinc.net, is packed with valuable information and resources. Be sure to check them out if you're looking for extra support on your journey. Okay, back to bookkeeping. The article mentions several ways to automate. What are some of those key areas?
One of the biggest time savers is linking your bank accounts and credit cards to your accounting software. This allows transactions to flow directly into your records, minimizes all that manual data entry.
So it's almost like having a personal assistant, categorizing your spending for you. What about all those paper receipts, those inevitable ones?
Many software options have mobile apps now, where you can snap a picture of a receipt, and the software will extract the relevant information. It's a fantastic way to go paperless and avoid losing those crucial slips of paper.
So lost receipts mean lost deductions, right?
Exactly. Proper record keeping, including those receipts, make sure you can claim all eligible deductions come tax time.
Oh yeah, speaking of tax time, I always thought financial statements were just for big corporations. But our article highlights their importance for everyone. So can you demystify what these statements actually tell us and why they matter?
Financial statements are like a snapshot of your financial health. Regardless of whether you're a business or an individual, they give you those key insights into your profitability, your cash flow, and areas where you might need to adjust your spending or saving habits.
So it's like having a financial checkup.
Precisely. There are 3 main statements to understand. The income statement. That one shows your revenue and expenses over a specific period. The balance sheet details your assets, liabilities, and equity at a given moment. And the cash flow statement tracks the movement of cash in and out of your accounts.
I'm starting to see how understanding these statements could be a real game changer for making smarter financial decisions.
Okay, our article also mentions a term that always makes me a little nervous. Accounts receivable. What's the best way to approach this?
Accounts receivable is simply the money owed to you. For goods or services already delivered or used. Think of it like this. If you've done the work, you deserve to be paid. The key is to be proactive. Send invoices, promptly follow up regularly, and use software that can help you track outstanding payments.
So it's about maintaining that healthy financial bloodstream for your business or even for your personal finances.
Exactly. Ensuring those timely payments is crucial for maintaining a healthy cash flow, which in turn allows you to cover your expenses. Invest in growth and avoid financial stress. This is all incredibly insightful. I'm already feeling more empowered to take control of my finances, but there's so much more to uncover. We'll be back in part 2 of this deep dive, where we'll explore more practical tips and strategies from our sources. Welcome back to the Life Mastery Podcast. We're continuing our deep dive into bookkeeping, and I'm really starting to see how these principles can apply to everyday life.
Absolutely. Bookkeeping isn't just about numbers. It's about gaining clarity, making informed decisions, and ultimately taking control of your financial well-being.
One of the hacks that really resonated with me from the article was the idea of setting daily bookkeeping tasks. It seems like a simple concept, but I can see how it can make a big difference.
It's a game changer for many people. Instead of letting tasks pile up, dedicate a short amount of time each day to bookkeeping. This helps prevent that overwhelming feeling and keeps your financial records up to date.
So it's about building a sustainable system rather than scrambling to catch up.
Exactly. Consistency is key. Even 15 minutes a day can make a huge difference.
We've talked a bit about automation already, but I'm curious to hear more about specific tasks that can be automated.
The possibilities are vast, but a good starting point is invoice creation and recurring payments. If you have clients who pay you regularly, set up automatic invoicing and payment reminders. This saves you time and ensures you're paid on time.
That makes sense. What about tracking expenses? I feel like that's where things can get messy.
That's where those mobile apps we discussed come in handy. Snap a picture of your receipt and the software can automatically categorize it and even extract the vendor date and amount.
So it's all about eliminating those manual steps.
As much as possible, automation frees up your time for the more strategic aspects of your finances.
Speaking of strategic, the article mentions using financial statements for analysis. Can you elaborate on that? I admit I sometimes feel intimidated by those reports.
Joby, financial statements are incredibly valuable tools. They help you understand your spending patterns, identify areas where you can save, and make more informed financial decisions.
So it's not just about crunching numbers, but about using those numbers to gain insights.
Exactly. For instance, by analyzing your income statement, you might realize you're spending more than you thought on a particular category. This awareness can then prompt you to adjust your budget or spending habits.
This is really resonating with me. It seems like bookkeeping, when done right, can really empower you to take control of your finances.
It absolutely can. And remember, you don't have to do it all alone. There are many resources available, including financial advisors, online tools, and even workshops or courses.
And speaking of resources, I want to take a moment to remind our listeners about an organization that's dedicated to empowering individuals in various areas of life, including financial well-being. It's called Wings of Love, Inc., and their website, wingsofloveinc.net, is a treasure trove of information, support, and guidance. I highly encourage you to check them out. Okay, now back to our discussion. The article mentions the importance of taking detailed notes when it comes to bookkeeping. Can you explain why this is so crucial?
Detailed notes are like breadcrumbs that help you understand the context of transactions later on. For example, imagine you see an expense for dinner on your credit card statement. A simple note reminding you who you had dinner with and the purpose of the meeting can be invaluable, especially if it's a business expense you can deduct.
So it's not just about recording the numbers, but about capturing the story behind those numbers.
Exactly. Clear and concise notes make it easier to categorize transactions, accurately understand your spending habits, and prepare for tax season.
Our sources go beyond just technical tips and emphasize the importance of setting measurable financial goals. Why is this so crucial for both businesses and individuals?
Goals provide direction and motivation. Without them, it's easy to drift aimlessly and lose sight of your financial aspirations. Whether it's saving for a down payment on a house, starting a business, or simply gaining better control over your spending, setting clear, measurable goals is essential.
So how can we apply this principle to bookkeeping?
Start by defining your goals. Be specific about what you want to achieve and set a realistic time frame. Then break down those goals into smaller, actionable steps. For instance, if your goal is to save $10,000 for a down payment, break it down into monthly or even weekly savings targets.
That makes it seem much more manageable. And how does bookkeeping fit into this goal-setting process?
Bookkeeping helps you track your progress towards your goals. By monitoring your income, expenses, and savings, you gain a clear picture of where you stand financially. This awareness allows you to make necessary adjustments to your budget, spending habits, or savings plan as you work towards your goals.
So it's like having a financial compass that guides you on your journey.
Precisely. Bookkeeping, when combined with clear goals and a strategic mindset, becomes a powerful tool for achieving financial success.
I'm loving this perspective. It's so much more empowering than just seeing bookkeeping as a chore. We'll be back in part 3 of this deep dive to explore the fascinating world of forecasting and how it can help you shape your financial future. Welcome back to the Life Mastery Podcast. We're wrapping up our deep dive into bookkeeping, and I'm excited to explore this final piece, forecasting.
It's a powerful tool. Yeah, it can really transform how you approach your finances.
You know, we left off last time talking about how bookkeeping can actually help you, predict the future. It sounds a bit like sorcery.
It's more about informed estimations based on your past financial behavior. Forecasting and bookkeeping uses historical data to project those future trends. It helps you make those smarter decisions about spending, saving, even investing.
So if I'm consistently spending a certain amount on groceries each month, I can use that data to create a realistic grocery budget for next year.
Exactly. Or let's say your business has seen steady sales growth over the past few years. You can use that trend to forecast future revenue, make informed decisions about inventory, staffing, even expansion.
Okay, so it's starting to feel less like sorcery and more like having a financial roadmap. Helps me anticipate what's coming.
That's a great way to put it. Forecasting helps you prepare for both challenges and opportunities. For example, if you're anticipating a large expense in the future, you can start setting aside funds now to avoid that financial strain later.
That sounds incredibly valuable, especially for those unexpected events. But how does forecasting actually work in practice? Where do I even begin?
Your foundation is accurate and organized financial records. This is where all that diligent bookkeeping we've been talking about really pays off.
So all those receipts, invoices, and bank statements I've meticulously categorized will actually help me predict the future.
Absolutely. Once you have that reliable historical data, you can start using various forecasting methods.
Okay, what kind of methods are we talking about?
There are several, ranging from simple trend analysis to more complex statistical modeling. Trend analysis involves looking for patterns in your past data. For example, if your business revenue has consistently increased by 10% each year for the past 3 years, you might project that trend to continue in the future.
That sounds pretty straightforward.
Yeah.
What about those unforeseen events? The ones that can throw off even the most carefully crafted projections.
That's where flexibility and adaptability come in. Forecasting isn't about predicting the future with absolute certainty. It's more about creating informed estimates based on the best available information. It's crucial to regularly review and adjust your forecasts as needed.
So if my income suddenly changes or unexpected expenses pop up, I should revisit my forecast and make adjustments.
Exactly. Life is full of surprises, and your financial plan should be able to adapt to those changes.
This is making me realize that forecasting isn't like a one-time task, but an ongoing process.
Precisely. It's about staying engaged with your finances and using the insights from your past to make informed decisions about your future.
As we're talking about this, I'm realizing that forecasting has applications far beyond just business.
Absolutely. It's incredibly valuable for personal financial planning as well.
Can you give me an example of how I could use forecasting in my personal life?
Let's say you're saving for a down payment on a house. You can use forecasting to estimate how long it will take you to reach your savings goal based on your current income and expenses. You can also factor in potential changes like a salary increase or a decrease in living expenses to see how those adjustments would impact your timeline.
That's a great example. It seems like forecasting can really empower you to make smarter financial decisions, both in your business and personal life.
It's all about taking control of your financial destiny. And remember, you don't need to be a financial expert to benefit from forecasting. There are many resources available to help you, from online tools and templates to financial advisors who can guide you through the process.
Speaking of resources, I want to give one last shout out to Wings of Love Inc. Their website is wingsofloveinc.net. They offer fantastic support and guidance for all aspects of life, including financial well-being. I highly encourage everyone to check them out.
Yeah, it's amazing to have those resources available.
It really is. We've come full circle in our bookkeeping deep dive. We've explored everything from the fundamental principles of accounting to the power of automation, the importance of detailed record keeping, and now the strategic value of forecasting.
It's been quite a journey.
I feel like we've unearthed some real gems along the way. I hope our listeners now see bookkeeping not as a dreaded chore, but as a valuable tool for financial empowerment.
Absolutely. Financial mastery is within everyone's reach. It starts with taking that first step, getting organized, and embracing the principles we've discussed today.
Couldn't have said it better myself. That's all for this episode of the Life Mastery Podcast. We've loved having you join us on this deep dive into the world of bookkeeping. Until next time, keep those numbers in check and those goals in sight. Thank you for listening to the Life Mastery Podcast.